Good morning, everybody. Welcome to another Daily Mark Report brought to you by Mike Bjork, and happy Friday. It's Friday, January 11th. Hope you guys are having a great morning thus far, and I hope you guys have some great upcoming plans for the weekend here. Hey, we got an important component in the economic calendar today, and that is the CPI report. Also, well, the abbreviation for Consumer Price Index. This is important primarily because this is the inflation on the consumer level. This is one of the two indexes that we look at, but the PCE is more favorable to the Fed, and they look at this primarily because this is part of the reason why they do these rate hikes and keeping inflation in check. So by raising these rate hikes, it keeps prices at a minimum, so people stop raising prices and not go up too fast. So it, it's important that we have it go up, but we don't want it going up too rapid, and that's why they try to raise rates to keep it under control here. So here's the headline number, the CPI or Consumer Price Index. Previous month we had basically unchanged in November from October to November. So the forecast for November to December was supposed to be a drop in 0.1%, and it did. It came in right at expectations that it came down 1.1%. Now year over year it dropped from 2.2% down to 1.9%. And then now when you strip out the items like food and energy, we get what they call the core CPI. This is really what they look at because the variables of food and energy are something that we cannot control. And by this is kind of our control data that they look at. So the previous month in November, it went up 0.2%. Forecast for December is supposed to go up 0.2% again. And it did, came in right at expectations, 2.2%. The year over year on this one remained unchanged at 2.2%, so there's no change on those. Now, the reason why the headline came down was primarily because oil prices dropped in December as well. If you recall, you've been seeing it probably at the gas prices where oil actually dropped less than $50 a barrel, and right now it just kind of went above $50 a barrel just recently. So we're at a very low rate here where before we were back around, I think it was October, November, around October, it was reaching like $80 a barrel. So that's how much of a drop we've seen in oil prices and why the headline numbers dropped a bit. The core, of course, it has been going up. We've been kind of seeing it in the wages as part of it, other areas as well, health care, health insurance, and everything else. We're starting to see that. Let's jump over to headline calendar. Oops, sorry about that headline. And stock market is currently down. Now the stock market was down much further. It kind of looked at the headline news. It was kind of worried that maybe this might drive the Fed to raise rates. Now it's kind of easing back down a little bit. The Dow I saw was earlier around down 100. Now it's down about 40, 50. So it's kind of easing back a little bit. This could easily change throughout the day. Yesterday, if you recall, we were down in negative territory and closing in positive territory. Now, there were some comments made by U.S. Treasury Secretary Mnuchin, and this is giving some optimism to the U.S. and China trade talks. Now, as you may recall, we've been talking that we sent delegates over there. They've been meeting over there. It seemed to be progressing. Even went to a third day. Even their highest premier that that in China, I believe his name He, even met with them a little bit, and now they're announcing that he's going to be traveling over to the U.S. to continue those talks later in January. So those talks are progressing, which is obviously a very good sign that some good things to come. That maybe we might get a deal closed sooner than later here. Let's kind of see how this is affecting the bond market, see what interest rates are doing. Now, yesterday we had what they call the bond rollover, which we do every single month. Basically, it's primarily, it doesn't affect pricing on the interest rates, but it does look like it's worse than what it is. Now, this translated about additional 6 basis points, which would brought us underneath this floor of support. We would have been just above that floor of support with 5 basis points. But as you can see, starting today, we were at that floor, and now we're up about 17 basis points. So we are seeing about an improvement in interest rates today. So interest rates will be a little better today so far. Now, how much better as the day progresses, as maybe the stock market continues to improve. The reason being is that the money from the stock market, the reason why it was negative territory, was moving into mortgage-backed securities, which was giving it that flight of safety. So if that money is being pulled out back into the stock market, the bond market will come down again, and we could get a price for the worst. So just keep your fingers on the trigger if you're floating out there with any interest rates on the refinance or purchase transactions. Otherwise, we're looking pretty good right now. We're above this line here, which is obviously very important as we've been discussing. And here's the treasuries. Treasuries are down currently right now. We're down to about 2.7, as you can see here. And we're still in this middle range here, so there's plenty of room for it to drop, but there's a little bit of room for it to rise as well. So this is something else we're keeping our eyes on. All right, folks, that pretty much wraps it up. I hope you guys have a great weekend again. And if you guys want to get keep up with any of these updates throughout the day, just come over to Twitter. You can follow me at Mike Bjork, and that's where I post the daily updates. All right, have a great rest of the day. Enjoy your weekend, and we'll see you guys Monday. Thanks for watching.